Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, as you can see, I have moved spots here in the office, so bear with us this week as we kind of fine tune the camera and audio abilities here in the new room. But with that said, we are trending up on this current week, looking to finish strong to begin the year in the month of January. Now, you guessed it last week, and I kind of gave you the preview. It's going to be all about earnings this week. So without further ado, let's dive right in. And at name number 3, it's Union Pacific, the railroad company, having a very strong quarter in Q4. Now, what they did is they improved their margin profile and really hammered down on cost control methods. And that has really positioned them well going into the new year. Now, what that's going to do is really put them in a good position to potentially mitigate any tariff-related impacts that they may see from the Trump administration, as they do run railways from Canada and Mexico as well in the Western United States. So they're in a very good position versus some of the other railroads right now, and only time will tell, and we'll keep you updated as we go forward into the year. At name number 2, it is EA, or Electronic Arts, the makers of games such as FIFA, Madden, various other sports games as well, falling nearly 16% in one day yesterday. They fell dramatically. They had a very weak quarter. Now, a lot of this was being pointed towards slower than expected sales growth. And the funny thing is, management did point out that it was largely because of lagging sales in their new EAFC 2025, aka FIFA 25, and lack of Dragon Age sales as well. Now, it's quite funny because my friends and I, we also play FIFA, and we're playing on a 2-year-old version because we don't even want to buy the new game. So that gives you a little bit of an indicator as to where the demand is for the yearly iterations of their sports games. Now, management did come out and say that they do believe that they will return to growth in fiscal year 2026, but we'll have to see which game really propels that forward, whether it's Madden or the new NCAA football college game that came out last year. And then finally, it was Netflix at number 1, blowing out their quarter, rising almost 15% after they smashed expectations. Now, Netflix added roughly 18 million new paid subscribers in Q4. That was almost double what analysts were expecting of 9 million. In addition to that, they have now reached total paid subscribers of around 300 million globally. That is an astounding number. They continue to aim towards their goal of 500 million. Now, one of the key catalysts for this past quarter was, in fact, the live sports, which was obviously the Christmas Day NFL games, as well as the Mike Tyson and Jake Paul fights. So these new live sports programmings on the streaming platform could be another huge catalyst for Netflix going forward into the future, and has really propelled the stock further and further upward. Now, those are your 3 key names this week. What are we looking to for next week? Well, next week, it's going to be more and more earnings. Like I said, we're going to keep ramping this up, but next week, it's going to be the big dogs that are reporting. We're talking Microsoft, Meta, Tesla. So be on the lookout for those in next week's video. But otherwise, that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the written week in review. But as always, please go out, enjoy your weekend, try to stay warm out there, enjoy some football, and we will see you the same time next week. Thanks again. Bye.